European football, Germany's amazing run has led to overinflated expectations. That's why he favors French stocks over German stocks. Joining us to talk about it is Vincent Deluar. He's Europe strategist at Ned Davis Research, and as you can see, he's right here in studio. It's great to have you along. We watch these markets fairly closely every day. We bring them up on our screen and watch them quite closely for our viewers every day. What do you see ahead for the German stock market in particular?
Well, I think we came off a cycle of about 10 years of remarkable outperformance by German equities. And that cycle was driven by three things. First, the structural reforms that Gerhard Schröder completed in 2002, the Hartz-IV Agenda 2010. Then you had the Eastern enlargement of the European Union. And thirdly, and probably most importantly, the China investment boom. And if you are the world's largest exporter of industrial goods, that is a huge tailwind for you. Now, if I look today, all these three tailwinds are turning back. Structural reforms. Germany is actually walking back. Merkel was just lucky to be there at the right time, but she hasn't done very much on that front. Eastern enlargement, I think Mr. Putin has put the Red Army in between the future of Eastern Europe. And then the last one, the Chinese investment boom, clearly it was a once-in-a-generation story, and it's over. So if you look at an index like the DAX, which is mostly industrial exporters and then a couple of banks that are frankly not so good, it's going to be a lot harder for them.
Okay.
Oh no, I would completely agree with that. And, you know, it's very interesting. You know, because in Canada we have the same sort of issue, right? we're dealing with a once in a lifetime investment boom. You know, in the same way that really was a tailwind for Germany, it is for us as well. I guess the one question I have for you is just, you know, I think one of your key calls is France over Germany. Like, what elements of the French market, like specifically, because I still look at the high quality nature of some of these German franchises, like a BMW. Now, I completely agree with you on the bank side, but could you maybe point to me some elements of the French market that lead that, you know, next leg up?
Sure. First of all, you have very high quality stocks in the French market as well. I mean, you look at you look at L'Oréal, you look at Accor, AXA. I mean, France has also global multinational exporters that can compete with Germany, but I think on the next rebound, I would focus more on the domestically oriented side of stuff in French. Maybe banks. Banks are very, very cheap. French banks are well capitalized. They're generally better run than the German banks. We look at the real estate sector. And the last thing I would look at is the defense sector. France just signed about 79 billion euros in contract over the past 12 months. We've seen the submarines with Australia, the fighter jet with India and Qatar. And this is something that France has kept. And this is, I think if we look at the world going forward, selling helicopters and submarines may be a better idea than selling cars.
Just as you've been speaking, in fact, when you began speaking, Mark Carney is speaking in England, the governor, of course, of the Bank of England. He has said that a Brexit, a departure of the UK from the European, could lead to recession in the UK. Any thoughts on that statement or the Brexit debate generally, what it means to European markets?
I tend to view this with a little bit of skepticism. I mean, of course, every side of the campaign is going to paint the other outcome as very bad. It's a lot. It's kind of hard to paint a rosy picture for the European Union. So I guess the technique of the in campaign is to say the world's going to collapse if we leave. Honestly, I don't think anyone really knows what's going to happen if the UK leaves. My personal impression is that nothing will happen. They will just negotiate, and then they'll find a deal, and it's ultimately all about money. That's what it always was about with the UK. I want my money back, and this is bargaining, and we're making much ado about nothing.
Do you expect short-term volatility in European markets if there's a yes vote?
Yes, meaning leave or stay?
Yes, meaning leave.
Yes, absolutely. I mean, there will be. I mean, you already see it in the pound. You already see it in the banks, in the financial sector. A lot of uncertainty, and I think, you know, investors should see some of that as a buying opportunity. I mean, some of the British banks will get sold really, really hard on the eve of a leave vote. And my guess is that, I mean, the British and the European economy are so integrated that they will have to work something out. They're not going to, the city is not going to disappear overnight. And maybe the market is worrying a little too much about this political stuff.
Okay. Well, thank you, Vincent. It's great to have you. I hope you come back sometime. That's Vincent Deluar, Europe strategist at Ned Davis Research, based in California, but visiting us today right here in Toronto.